Does any of this, Surratt, in that big brain of yours, does any of this sound like, smell like, look like panic buying?
No, I would say if you look at the rest of the market, if we would be much higher, yes, then speculation comes into it. What we're also looking at here is end of year. Some of these stocks were down a lot last year. Look at Intel, look at Moderna. You had tax lot selling. You probably have shorts uncovering. I know Moderna specifically, the CEO spoke. So you do have things, catalysts there as well. But you're looking at value players coming into stocks that are really too far down. And the other side is we have a whole lot of stocks that have done really well. So people are taking some risk off of there as well. So you're getting the speculative cheap play. And then, and then we'll see what happens, whether these become kind of the stocks that everybody, all the retail investors want to buy.
David Zervos, I'm sure your clients at Jefferies are asking you, I assume they are, about copper, about gold, and about what we just showed, silver. Silver has industrial use. It's part of the data center story. But guess what? It was a year ago, too. Nothing's new with silver. What's going on with it's $92 an ounce?
It's just a big momentum trade. I think the hedge funds are in it. They're in it big. They've been in it. They made a lot of money. They like to press. That's kind of the mechanism inside of these pod shops. You start winning, you can lever up more. People let you lever up more. And when it goes down, it could go down pretty aggressively. I don't know when that is, but it's definitely a favored trade in the hedge fund community. And I would even say in the macro hedge fund community, which is unusual because that's not typically their wheelhouse.
What you're saying is important. The Citi guest last hour, their head of commodities, said much the same thing, that the central bank buying has been pretty steady since 22, and a lot of this is now just financial players. Because the narrative is gold is rising because of geopolitical tensions, or it's telling us something or what have you. Yes, that's all part of it. But if it's also just a crowded trade, it's a hot money trade, and it could kind of go any which way.
I think it's a hot money trade. But, I mean, I could go for a lot longer. And I think...
Which is what he said, too.
And it has fundamentals behind it, Kelly. I mean, part of the reason it's been going up is because these central banks have witnessed what we, the U.S., and the Europeans did when we conscripted the Russian assets. And they said, hey... we can't really, we're a little country, we're Mozambique, we're Sri Lanka. If one day everybody decides, hey, we're going to turn off your reserves, you're kind of messed up. So gold is going to be where they go, and everybody's front running that because those guys move slow.
And then if you look at all the commodities, David, everything is bought in dollars, right?
Yes.
So as our dollar gets debased, you get to buy more of it. It's a good hedge against inflation. And then you get industrial production, right? So it's happening with copper. It's happening with aluminum. It's happening with steel, gases. So what happens in a crowded trade for not just the investors, but the traders now, you can buy these things in ETFs. You can buy these in anything. And then the retail people come on board. Game
Forget
over.
it. Yeah.
You read my mind. Or maybe the notes. I don't like talking about currencies. I don't fully understand them. It's the most liquid, biggest market in the world. We're talking about yen 160. That's a critical point. I know that's about the cap of my knowledge on currencies, but I do know the dollar keeps trying to break out. It won't. It keeps failing. Dollar index, we just showed it, just over 99. It's probably going lower based on what the charts look like. How much of all of what we're seeing is currency moves?
I think it's a piece of it, but it's not the whole puzzle, right? It's part of, hey, if you've got a macro view, you've got inflation view, this is all part of kind of that. How do I hedge against this, and how do I protect my assets?
And I will add to this discussion. I don't know if you guys caught our discussion with Mike Furley last hour. So JP Morgan now thinks no more rate cuts this year and a hike in 20. Can you imagine? Can you imagine if Powell in a couple of weeks, Dave, were to get up there and say core PCE, which is what JP Morgan thinks, is running at 3.1%. We are already accommodative. There's no more cuts this year, and we might have to hike. Can you even imagine the market fallout and the political fallout?
I think it would be, it would be a tough day on the markets, and it would be a tough day to watch the political fallout more than the market fallout.
But
to be
does
honest
he have a point? Do they have a point that that's what's going on?
I love Mike, good friend, longtime friend. Totally disagree with him. I think that's just not correct.
Larry
at
Lindsey
all.
said the same thing earlier this week.
I like Larry Lindsey, too. He was a governor when I was at the Fed way back in the 90s. I really liked Larry.
Are we accommodative?
He was a smart guy.
Core PCE 3.1%.
The unemployment rate has risen over the last 3 years by a full percentage point, okay? And the labor markets have a lot of tatters inside of them. And we see that the inflation rate has come down dramatically from the peaks. Inflation expectations are anchored, And I think when you're trading off that dual mandate of labor market inflation, you're supposed to be leaning a little more on the on the labor market side, not on the inflation side. And I think that's what the Fed is telling you. If they did switch, I think you would have a pretty big fallout.